Hello, my name is Aaron Edwards, co-founder and market consultant of Santos Springs. We offer grain marketing solutions to producers in multiple countries. Welcome to our W2H grain marketing channel. Go ahead and hit the subscribe button. I also recommend tapping the bell so you get future notifications. And if you like what you see, hit the like and share this video with other farmers who care deeply about their grain marketing. If you are a corn or soybean farmer, your revenue depends not only on your production, but also the answer to three simple questions: when, how much, and how you sell. One W, when, two H's, how and how much. Our W2H mentorship provides a clear, concise, and custom approach to answering each one of these three questions for your specific farm throughout the year. Before we start this week's content, it's always important to remember that trading in futures products entails significant risk of loss, which must be understood prior to trading and may not be appropriate for all investors. This commentary and the information contained within should be considered market commentary and reflect the opinions of the author. For those of you watching this with a delay, if you are a U.S. corn or soybean farmer and want to stop being held hostage by market uncertainty, let us teach you how to place each one of your bushels in a grain marketing strategy specifically designed to optimize your farm's revenue. Click on the link and we'll work together to see if our W2H mentorship is the right next step for your grain marketing. Hello, welcome to this week's edition. A bit of a scare in the soybean market. That's what we're going to talk about that. But before we get into the grain marketing, before we get in kind of to that analysis part, it's always just important to remember that the call to action is critical. So let me get this back on the big screen. And for this week, action, I'm not recommending any action, right? Last week, my recommendation was take profit on part of those corn positions. You know, we had reowned some corn positions, taking profit on part of that. No action required. So a lot of interesting stuff in this week. Obviously, I want you to watch the video, but if you're busy, you have your hands full, you need to get off to something else, then no action required from I'm not recommending any action this week. So let's go ahead and let's talk through some of what's going on in the marketing, but that's what I wanted to start with. The first big news, let me get this screen shared here and we'll go through some of the images real quick, move through this. Let's see the one that we want to get to. That's the first one I want to see. Looks like the screen share is giving me grief. So let me change this here. And let's get another screen up there. There we go. Okay. All right. So that shows the progress of the crop in South America. You don't need to read Portuguese, I'll read it for you. But the green area that accounts for 53% of Brazil's crop is in vegetative development. 4.1% is the beige, that is emerging. 27% is flowering. So we're going to see more and more go from green to gray. So a quarter of Brazil's crop is flowering. If they were to have dry weather, which is not expected now, if they were to have dry weather, we're coming into the period where a large percent of the crop will be flowering. So far, there's rain and rain forecast, so that's that gray area. And then the yellow is filling pods. And then we're just starting to get the orange area that's maturing. The orange area, it's maturing. I actually saw videos this week of soybean planting or soybean harvest just getting started in Brazil. So that's a pretty significant issue. And then that's the other one. We always start with a market plan portfolio. The only recommendations that I've made so far are on what I call quarter four bushels. If you're watching this close to real time, you know exactly what volume we're talking about. Then we always analyze seasonals, funds, technical indicators. That's what we're going to jump into right now. And finally, the action plan. In my opinion, there is not action required. I'm not recommending action this week. So it's more of an update week. So the first kind of going through the funds, let's look at the funds position on soybeans. See if we can make this big, see if it'll cooperate with us. It's giving us grief. Okay, there we go. So if I can get my mouse in there, the first thing I want to point out is that you do not have the position of the funds is, oh, here, I think now I got it. Let me share another screen. This is going to work better. There we go. Now I got it nice and big. Okay, perfect. That's the position of the funds. That's managed money. So all throughout the year, they have been net. They've been sold. This is soybeans, Chicago managed money. They've been sold. They did reduce their sold position. So their net position, if you look at that far right-hand side, it's the smallest sold position that they've had basically since early in October. They've never gotten long, but that's the smallest sold position. The huge dilemma that we have now, are they selling, are they paring back on their winding down their sold position so they can sell it all over again coming into the Brazil harvest? That's everyone's worst nightmare. That's what could see soybeans just absolutely get destroyed. Or have they been trying to sell this market on bearish news and it just hasn't gone down enough, so they're kind of giving up on being sold? Did they unwind their sold position so they can sell it again and knock the price down again? That's every farmer's worst nightmare, a possibility. Or have they given up on being sold altogether and are they just kind of stepping to the sidelines? And if so, then we might not have selling pressure from the part of the funds. Next image, this is July soybeans. So if you've been following along, this is where I recommended when exchanging cash sales for a reownership position. And the last two sessions, really the last three sessions, though we tested that 20-day and man, did it fail. 3 sessions in a row, just absolutely getting destroyed. And how low can it go is kind of the question. So this is July 25 soybeans. And we're in kind of uncharted territory. We'd have to go back to 2020 to have this type of pressure on the low side. And this is disheartening, right? We tried to get up to the 20-day, hovered around it, and then it just absolutely got destroyed. How low is this market going? That's the question. That's the huge question that I never have a crystal ball. Sometimes I wish I did more, and sometimes I wish I did less. I really wish I had a crystal ball to understand the speed market to see, is this selling pressure going to be similar to last year where it just absolutely gets destroyed coming into the Brazilian harvest? Or is this just the soybean market kind of throwing its last fit and seeing if there's anybody excited to sell this? Because like I said, the spec funds, when we got, I don't know if you could see my cursor. I don't think the cursor is showing up. But the sell-off, if you look at the price level in May down to the sell-off that August isn't showing up, but the lows in August, that sell-off, most of the way through there, the net position of the funds, they established a huge sold position. So that big old sell-off between May and August, that was spec funds really piling it on. Maybe that's what we'll see again. Maybe we'll see spec funds really selling this market. I suspect they're selling these last 3 days, this going down. But unless they're going to really sell it hard, we don't necessarily have to have the price drop. There's also another image that sheds light to this, and this is the Brazilian currency. And you'll notice that the Brazilian currency today, it put in the highest price level ever. So let me go back to a big screen because I want to explain this. I want to understand this rationale. When I think of market analysis, I'm focused and I'm zeroed in on buyers and sellers. Buyers and sellers. Okay. Who's buying, who's selling? Possibility number one with soybeans, the spec funds, they sold. That's that drop from May. They really started selling back in November of 23, but they sold between May and July and August. We had this huge sell off, and that was spec funds just absolutely destroying the soybean and also the corn market, right? That sell off. So now they've kind of almost all the way wound out of those sold positions. Are they going to sell it again? And if so, we can just see the soybean market really take a dive. Or are they kind of done selling soybeans? They're afraid of maybe inflation, or maybe they're noticing that we have strong exports, or maybe they're saying, well, we've known Brazil's a big harvest for months. What's new? It's not really falling that much anymore. So are they going to sell that down, or are they going to be neutral? Wish I had a crystal ball to know how the spec funds are thinking of trading this market. The other group of sellers is Brazilian farmers. And so what would motivate a Brazilian farmer to sell? They are underpriced compared to previous years, and they're looking at their price in Brazilian currency. So if the Brazilian currency goes up, it's akin to a rally. What's interesting to me is that the Brazilian currency is at all-time highs. I think that did add some selling pressure from farmers in Brazil. But what's interesting is the cash price of grain isn't moving that long. So we're already seeing the basis give. Basis in the U.S. on soybeans is sideways to up. Exports are strong. There's not a ton of beans around. I mean, there's plenty of beans, but the U.S. does need them. So basis levels in the U.S. are okay, maybe even strengthening a little as beans go down, but they're mainly sideways. Basis levels in Brazil have begun to fall during harvest. Exchange rate in Brazil peaked. So I think that who is selling this soybean market down? Farmers in Brazil motivated by exchange rate. That's one group of sellers. We'll know next week, but I think another possibility is spec fund selling. So how low will it be sold? That's the huge question that it would be really nice to know. And what I feel somewhat confident in is that the exchange rate in Brazil, it's already started coming off of its highs. Markets don't usually stay at their high forever. It's also important to remember that Brazil, on their trade, soybeans is a big item for their trade. And then the double crop corn comes in right after the soybeans. So there is a seasonally strong export that happens, say, between March and about August. And as those crops leave the country seasonally, dollars pour in. So it's very normal to see that exchange rate come down in Brazil. So I would expect we're not going to just see that exchange rate continue to just escalate, go higher and higher. As we see dollars come into the Brazilian economy, I would expect that exchange rate to level off. It doesn't need to go back to lows necessarily, but I would expect it to level off to some extent. Also, I'd expect basis to fall. So as basis falls and exchange rate falls, will Chicago fall along with them or not? It's not necessarily that it would. We've seen that those markets trade in opposite directions before. But today's trade, or this week's trade, I do think is tied in large part to the exchange rate. Let's go back to a big screen here, and let's shift gears to corn. See if we can click over to the corn position of the funds here. There we go. Huge news on the corn. Corn established the largest net long position all year. Pretty significant long position. Not big enough to justify selling or anything. It's not a huge position compared to historic long corn positions, but funds are clearly saying, I want to be long corn. And that's interesting because we're seeing the ratio between corn and beans get a little bit lopsided. So beans are going down, corn is steady, that ratio is improving, and funds are saying, I want to buy corn. So the trade that you'd expect, whenever that ratio gets too far off, you'd say sell corn, buy beans. But we're seeing funds saying buy corn. So that was a question last week. Will the corn market bring support to the bean market, or will the bean market pull the corn market down? Too soon to tell. But I definitely think that's something to keep an eye on. Corn is trading at an interesting level. If you look, the blue line up here at the top, that's the 200-day moving average that's coming down. And then we have this little blue line here. This is the 20-day We're trading, basically support is at the 20-day, resistance is at the 200-day. I would suspect that we'll ping pong between those two price levels until it comes to a wedge with the 20-day coming up. So I would expect this particular contract is July. I would expect we see prices there for 450s and 460s for most of on the July contract, for a lot of the rest of December until we finally get that wedge closing in, and then it breaks out either to the top or to the bottom. So the main thought with not recommending action now is because I don't think that we're likely to miss opportunities. I think we're more likely to just ping pong sideways. And so if there's a decent shot, we'll have as good of opportunities tomorrow as we will today. We might as well make decisions next week or tomorrow, so to speak, when we have more information, right? So I'm not opposed. Delaying decisions because you'll be better informed is very different than sitting on your hands and not making decisions. So it looks right now technically that we're in a wedge. If that wedge continues to close and if we stay between support and resistance, and then we also have the quarterly stocks coming up at the end of the month, Christmas, New Year's, whatnot. So I think thin trade, ping-ponging between resistance and support. If I were to place a wager, that's what I would say is likely going to happen on the corn market. Then, knock on wood, will break out towards the top. If corn does get a golden cross, breaks out towards the top, and starts making a run closer to $5, that's where I think it would be hard for beans to get lost, and stuck and drug behind. I think if that were the case, we would see beans finding some level of support, just because before too long we'd start talking about the battle for acres. So just going real quick to kind of a summary as we think about it. Corn seasonality, it's neutral. It's neither a buy nor a sell. Beans are technically a sell from a seasonality standpoint because this is a time where we might get weather risk, but that's not the case. The funds, position of the funds is they're long on the corn, but not long enough to justify selling. So neutral on the beans, although they're sold. And then corn is in an uptrend above the 20-day mover. Beans are in a downtrend below the 20-day mover. Now we're going to go back to the big screen and go to some Q&A. Got some questions here. Let me get those pulled up and we'll go over those. How low will the bean market drop? Man, I really do wish I knew the answer to that. I'll paint the worst case scenario, and then I'll paint kind of my my opinion or my picture. Worst case scenario is we have 70 to 80 million metric tons of soybeans out of South America that still need to be sold. Those will be sold Q1 of Brazil. On top of that, spec funds just decide to sell, and so they just absolutely destroy this market, and the bottom just falls out of it, and we get 100 million metric tons of selling pressure down, equivalent of 100 million metric tons of selling pressure downward on the soybeans, and then it goes as low as it has to go to basically throw a fit on that. That is a possibility, and I think the fact that last year we went from 14 to 10 and it didn't take all that many months, I think everybody's fear is we're going from 10 to 8 or 10 to 7 or 10 to however low it has to go. And everyone remembers the 2018 trade wars. And so I do think that there's this concern, and it's like, well, there's a huge crop in Brazil, so beans have to fall. Trump's coming into office. There's trade wars. Last time that happened, beans have to fall. It happened last year, so it's going to happen again. First of the year, beans are going to fall. And I think that that's the fear or the concern. And it is naive to say that that's not a possibility. That is a possibility. And I think that is what a lot of farmers are, just a lot of people in the industry. I think I would even say that might be kind of the more dominant narrative. Not wishing to be contrarian, but for me, it's important to say is everything always looks super bullish at the top and everything always looks super bearish at the bottom. If we take 2 steps back and we don't look at headlines. All right, take 2 steps back. Don't look at headlines. Let's just talk about, pretend that we don't know what's going on the news channel, right? It's December, it's late December. A quarter of Brazil's crop is flowering, and within the next few weeks, more than a quarter of Brazil's crop will be flowering. And then they still need to fill the pods. So there is still weather risk in Brazil. Let's say, again, I said we don't know the headlines, right? We don't know that there's rain forecasted. That's just a fact, right? That's just a development. Is there still weather risk in Brazil? Yeah, if the rains would shut off, a quarter of the crop is, I would even say we're coming into the maximum, shy of delayed planting, we're coming into the maximum weather risk. If rains would shut off in Brazil, you would have a quarter of the crop flowering now that's hurt. I don't remember, was it 17% that was filling pods that could lose some yield potential? And every week that goes by, those beans in the developmental phase are going to be more and more flowery. So over the next 2, 3, 4 weeks, we're going to see the lion's share of the Brazilian crop come through flowering and then filling pods. So there is still weather risk in Brazil. The thing is, we're reading headlines, so we know that there's rain forecasted. But there is still weather risk. The massive Brazilian crop may not happen. It could still not happen. Thing number one. Thing number two, if you look at the demand numbers for both corn and beans out of the US, you would say, what story does this demand tell? And a better description of the export is that it looks like countries are saying, I want to make sure I have enough corn and beans. And it does not, it looks more like that than they're saying, I'll wait to buy it from Brazil. So if you look at soybeans, it looks more like the big buyers of soybeans are saying, let me just make sure I have enough soybeans just in case. That's not the behavior of saying, yeah, I don't really need US beans. I'll just wait for Brazil beans. So I think that actual buyers of grain are saying, oh, it's on bargain, lowest price since 2020, and we don't know that we're going to get the crops out of Brazil. Plus, there's geopolitical uncertainty. So there is still weather risk in Brazil, although there is rain forecasted. Demand is strong. Basis is strengthening. We've seen bull spreading on the calendar, and we've seen bull spreading between calendars, contracts, like compared Jan to July. We've seen that pull. All of those things are potentially bullish. I'm not saying it has to be bullish, but they're at least supportive towards markets. And we also know that if you line up the price in December versus the price in the spring, usually more years than not, you have friendlier prices for soybeans coming into the spring. That's not a abnormal thing to do, right? You take the average price in, say, May or June, and the average price in your December, and that June price on average is going to be better than the December price. For all of those reasons, again, there is a narrative that says beans just need to get destroyed, and I really have no clue on how low it will go. But the way that I make decisions based on the factors that have made a difference to me, demand, there is demand for beans. There is still potentially weather risk in Brazil. Seasonally, we tend to see improvement, and calendar spreads have been bull spreading. If you got a July position, it might be a bumpy ride, but I don't see a reason to run for the hills yet. That's kind of where a May position or whatever it is, or if you got bushels, like I said, my only recommendations have been on Q4 bushels. And basis is still sideways to up on beans. So I'm not, how low can it go? The bad news is it could go however low it needs to go, but that's not, I think we will find support somewhere in here before too long. If you can be patient, I would be patient. Can we see $5 corn this year? Everything's possible. Don't have a crystal ball. I think psychologically speaking, anything closer to $5, I think it will get sold. And I think that $5 might be kind of that elusive dangling carrot that keeps farmers from selling, your 480s, 490s, keeps farmers from taking care of the work that they need to do. And so I definitely wouldn't say Let me sit on my hands. I'm waiting for $5 corn to sell. That's actually a plan not to sell, right? I'm waiting for $5 corn to sell is saying I'm not going to sell. You have to have a plan that tells you when you will sell. You have to place your bushels in a portfolio. So is it possible? Absolutely. Am I holding my breath for it? No, not at all. When will markets start paying attention to acreage? I actually think this year that conversation might come up. Typically, we say the battle for acres is March, right? So that's the standard answer. That's the year in year out answer. Battle for acres is March, and then we talk about USDA outlook and all that stuff. That's the standard narrative. This year in particular, I think it might start factoring in sooner for two reasons. There's the profitability of corn and profitability of soybeans in the U.S. And then there's also kind of that ratio between corn and beans, which right now corn is stronger than beans. We know historically U.S. farmers like planting corn. And if we keep having a wedge between the corn and the bean markets, I think that battle for acreage conversation might creep in a little bit sooner. And I think if farmers can find a way to turn a profit on their corn, I think a lot of farmers actually might be tempted to mess with their rotation, even the farmers that are more disciplined on the 50-50 or 60-40 or whatever they use. I think this might be a year where farmers are saying, man, I can make a profit on corn and the fundamentals on beans don't look great. And then there's the trade war uncertainty. And I actually think the battle for acres might start, conversation might creep in sooner, and the discussion might be more heated or more malleable than it is most years. Most years, I think it's more hype, more market hype than it is actual farmer decision making, so to speak. I do think this year might be different. I think we might, January, February, we might already be pretty deep into a battle for acres discussion, depending on how markets trade, right? Depending if beans stay weak and corn stays stronger. If we're just to throw numbers, if corn's at 470 and beans are at 970 or 950 or $9, I think there's some farmers that are going to be punching some numbers and saying, man, if I can, decent yields, 470, make some money, I'm putting out corn. I'm just throwing out numbers, right? Not forecasts by any means. But I do think it might be a bigger factor this year than it is many years or most years. And I don't think that's on the radar, and I think it might creep into the news feeds before we know it. So in a nutshell, no action required. I will be dropping kind of just the results and the examples. That'll come in the email for those of you who get this in real time or close to real time. For those of you who are paid, so to speak, you guys will be getting kind of the recommendation and the breakdown of where we are. In a nutshell, we've been focusing on quarter 4 bushels, and we've taken some wins on the corn, and so far hunkering down in the trenches on our beans. So look for an email from me. Hope you have a great week, and I'll have to look at the day of the week, but we'll have a video before Christmas. And I'll wish you Merry Christmas then.